the second. So I think we got rid of the echo issue. Is actually might have been my fault, but I mean we're not gonna play the blame game, so
It was his fault.
it was my fault. Not sure what was going on there,
Okay.
but anyway, so eventually, so maybe some of the people that were watching, maybe they'll come back and
Jump back on,
join us
hopefully.
again, hopefully. But either way, let's start knocking out some of these stats because Chris has got to get off and do a phone call. So we're gonna jump
Yeah.
right into this stuff. Well, um, man,
Well,
everything's, it's the end of the year. Who cares?
I know.
New
Exactly.
year,
So
new
let's just
year,
like
new
have a
me.
little bit of fun with this. Because what I want to do is pretty much kind of revisit like what I was saying. So my buddy Justin Gomez, my late buddy Justin Gomez, this is for him. This is a shot glass that he got me for Christmas one day or my birthday. It says hang loose from Hawaii. This was his home island. I think it's his home island.
Okay,
And then drinking his favorite, which is Johnny Walker Blue. And
right.
then my buddies from my groomsmen, they got me this Spirit of the Apocalypse, The Walking Dead. And
Oh wow,
surprisingly, it is really good.
nice.
I mean, they got it for the label, and it turns out to be a really good
A really good
bourbon
one.
whiskey.
Very nice. Very cool. And it looks like you've already had a few sips of it, so
Yes.
yes. um, let's see, man. Well, I'm all kinds of backwards now. That threw me for a loop. But should we just jump into the stats? What do you think?
Yes.
All
Yeah,
right.
let's jump in.
All right. So we're gonna talk about some stats, like I was talking about before. We're gonna go over just a quick recap of what happened this year in the market, and we're gonna go through some charts, some graphs. I'm gonna talk a little bit about the interest rates, how those shaped up throughout the year, and then briefly jump into the mortgage rates, or not the. I just said that the lumber future prices, and actually it's kind of interesting what's going on with them now. So they're actually starting to go back up a little bit towards the end of the year. So I'm going to talk briefly about that. But let me share my screen real quick and turn this on. I'll just go ahead and let me zoom in on this. So while I'm talking about this, I'm for anybody that's not watching the actual video that's going to be listening later. I'm going to try to give as many points and numbers as I can, but starting off here is this is for the state of Florida, so this is the active inventory, and you can see. So we go from January 2021 all the way to November because that's the latest stats that we have on the Florida Realtor Sun Stats webpage. And so for active inventory, it's pretty crazy. We started just above 40, and then things really started picking up. People started buying homes like crazy going
Yeah.
into February, March, and then you can see it bottomed out in April and May. We had about just over 30,000 active homes for sale. This is for the state of Florida, so just over 30,000. June, July, August, September, it kind of started heading on an upward trend up to about 37,000, and then finishing off in November on a downward trend of about 34,000 homes for sale. So, I mean, I don't know.
Well,
What do you make of that, Chris? Is that
it is very odd that in the middle of the summer, when the summer season is just picking up, it bottoms out at the end of spring, right there in May, and so just like a rock skipping on the water, and that kind of is a direct reflection of pricing.
yeah,
So if you had this chart completely flipped and have it be
right,
priced, there's a direct correlation between the two. And
right.
so think of that a rock skipping on water,
Mm-hmm.
it's going to max out because the prices actually did drop in June, July, and then it started kind of going back up again. Um, so it's kind of wild, but that's a direct reflection. So we actually hit less than a month supply of homes for the state of Florida, or the
Yep.
Central Florida market, during that month of May. So since there was virtually no homes on the market. A lot
Mhm.
of people were holding back. Also, or they were going back. They were looking for apartments, which increased the apartment rent. And then also, I think when mortgage rates kind of started fluctuating during that time frame a little bit too. They started creeping back up, and then
Mhm.
also for the first time in recorded history for stats, to my knowledge, first-time home buyers dropped from an average of 32% to less than 30%. And I think as of now, it is at 26%, which is really bad. So
Yeah.
majority of our buyers out there are essentially repeat buyers, pretty
Right.
much people relocating, and then
Right.
investors.
And investors,
That's
people looking
that's
for
the
second
majority.
homes, and yeah.
Yeah.
So you mentioned month supply of inventory. So here's the chart for that starting from January. So in January, we actually had about 1.6 month supply of inventory. You see it was just a steep decline, like a roller coaster going down,
Hmm.
all the way into April, where we were at 1.1, 1 point, pretty much
And that's
1.1, and going April, May, and June.
yeah. And remember, that's for the state of Florida. For Central
Right.
Florida, it was less than a month.
Yeah, and for certain, depending on which counties you're looking at or certain
Hmm.
areas of Florida, yeah, it's down, zero point 0.7, zero point 0.8, zero point 0.9, things like that. But yeah, for the entire state of Florida, I'm just going to focus on that just for time's sake. But yeah,
Hmm.
1.1 for the entire state. And then July, July, August, September, it started coming back up. Still only 1.3. So, I mean, we're nowhere near what, you know, getting out of. Why does it keep doing that? There we go. Nowhere near getting out of, the extreme seller's market. We're still, to get back into a normal market, we need to be back around 4 to 5 months supply of inventory. And that's typically what you see when things are pretty stable. If you start getting much more than that, then it starts going into a buyer's market, and things kind of flip flop as far as uh, who has the advantage, whether it's sellers or the buyers.
Yep. And right now, the sellers have the most advantage. That's it. And if
Correct.
you have
Yep.
cash, you're a buyer that has an advantage, but you're competing with other cash. I'm really curious to see what the stats are for the amount of cash buyers because it is it's a lot. It's really high. I know that. I just don't know what the exact number is.
So
And
cash sales. So here's
yeah.
here's a chart for
Oh,
cash
there we
sales.
go. Look at that.
Let me throw that up here. So for January, we were at just about 5,600 cash sales, and then through the summer, look how much it increased. I mean, this is insane. Right here in March, we almost doubled. We were at
9,000.
5,600, and then up to just over 9,000, and then in June, over 10,000 cash sales. So of all the sales that were done, 10,600 of those were
And
cash sales. And
how many sales were actually done for the month of
Um,
June?
oops. Let me pull that up. So let's see.
Number of sales.
Actual. Let's see. New pending sales.
I don't think
So new
that's where we're
pending.
looking for. At
So
31,000 pending.
yeah.
So 10,000. Wow, that's a lot.
So so
That's a
pretty
lot.
much about a third of the sales across the board here for at least for the month of June. A third of those sales were cash buyers.
Yeah,
The rest of them were
that's
some sort of loan, owner financing, blah blah blah. So I mean
wow.
that's
That's a
pretty
lot.
intense, man. That we're seeing so many cash buyers, and they're coming from all over too. I mean, California, out in the Midwest, up in New
It's just
York.
hedge
You
funds,
know,
big hedge
yeah,
funds getting ready for
yep,
the great reset.
yep, yeah, exactly, exactly.
But the amount of cash buyers is pretty staggering. The amount of finance buyers is still there. But it was kind of wild, even though this is a lot of people are waiting for it to bottom out, waiting for it to bottom out, and then, like the record and the studies show that it's not going to because this is a real drive by
Yeah,
people. Um, and if you look at the number of homes sold year over year before the pandemic, and then
mm-hmm.
now, there is a surplus of people. There are more people selling their homes during this past 2 years than any other time in 18, 19, or 17.
Yep,
So that shows that even though there's more people selling, there are that many more people buying right
Oh
now.
yeah. Yep.
So this is a real drive. This is a real shortage. This is a real problem, not
Absolutely.
something that's fabricated or a balloon. There's no balloon here this time. This is real.
Right.
So what is it going to take for it to get normal, Jared? What's your
I
synopsis? What's your thoughts?
you know what, man, it's hard to say because, the pandemic, I think that's what kind of threw the wrench in things. It kind of stirred the pot. A lot of people got nervous about selling their homes, so that drove the amount of homes that were available. It drove it down, as we saw, as far as active inventory.
Mm-hmm.
Um, yeah, I think the housing prices, they've. Let me throw this one up here. The housing prices have been skyrocketing over the course of the year. So this is the Florida median sales price. And so for the month of January, we're at 305. And keep in mind, I've seen year over year increases of up to like 25% compared to what it was last year.
Mm-hmm.
Just did a market report recently, and it was one of the counties, I think it was Marion County, and they've seen some huge increases, somewhere in that 22% range. So essentially, last year, and then progressing to this year, their homes have increased by 22%,
Mm-hmm.
which is just insane. You can kind of see that here, the Florida median sales price, where it starts around 305, and it's done nothing but go up. I think we had one downtick right here from July to August. So
Yep.
it went 355 to 354. Ooh, big deal. And then, we can see that we're still on an upward trend going into November, December. Um, so
Yep.
I don't know. I mean, in order for things to go back the other way, these housing prices are going to have to come back down.
Mm-hmm.
And I think part of that is we're going to have to see mortgage rates, that's going to have to change. I think if mortgage rates start going back up, that's probably going to bring those housing prices back down. But I could
Agreed.
be
No,
100% wrong. I don't know.
no, you're right because that's a real thing. Mortgage rates have to go up. The Fed has already announced, an article was released earlier this week. I'm pulling it up now
Yeah.
so I can get a direct quote. Fed, and this was an article on the Florida Realtors, and the Feds meet and they expect three interest rate hikes in 2022.
Wow.
Here's like the second leading headline. In an abrupt policy shift, the Fed will also stop economy boosting bond purchases twice as fast as planned and possibly halt that program altogether in March.
Man.
Ugh. I mean, inflation is just super high right now. So interest rates have to go up. They have to
Right.
go up
Right.
in order to normalize it. And also, another leading contender is new construction. New
Yes.
construction has to increase. Before the collapse of the 2008, or the market crash 2007 2008, there was a surplus of new construction homes.
Mm-hmm.
So, and then once that bubble actually popped, there was no more building because there's a surplus,
Right.
and no one was buying because everyone was out on the streets or
Oh,
broke or
yeah.
lost their houses and stuff like that.
Yep.
So now that the economy came roaring back, we're in the roaring 20s right now. Yeah, if you think history repeats itself sometimes,
Right.
surprisingly.
Yep.
So we're in the roaring 20s, and then now the economy and the housing market has boomed to such a degree that new construction can't keep up. And with lumber is being shortage and high demand, the consumer is going to take on that price or that cost, which increases it. But if you can get, I think NAR stated about 3 to 5 years when we'll have into the surplus, or we'll have a normalization amount of new construction homes. So we're a couple years still behind schedule.
Yep.
So when we have that many new constructions, people start upgrading, people start downsizing, people start moving, and allows more homes to come on the market. So in my professional opinion, two things is the interest rate and new construction.
Yep. And let
Both of
me.
those need to go up.
Yep. And so while we're talking about interest rates, I've got those pulled up
Check
here,
it
and
out.
this is the we have the blue line, which is the 30-year fixed, and then the green line, which is a 15-year fixed, and then the orange-ish looking line is the 5/1 ARM. So,
It's like rust.
yeah. So the 30-year. So I mean, it was hovering just under 3%. So 2.67, 2.65 ish. Then it started going up a little bit during the summertime. Going into March, April, and then dropped a little bit. Eventually getting up, right around 3%. So I mean, when I'm talking, it's going up. I mean, we're looking at 3%. 3.18 is as high as it got this year. The 15-year was 2.45. These are insanely low interest rates. I mean,
Historically,
historically, and I'll even pull up. I'll change these dates.
do
And
the,
you'll
do the
see,
10-year. Yeah.
Yeah, I'll do that here in a second. And so you can see it dropped back below 2%. It went back up to 3.14, and right now we're hovering right around that just over 3% range on the 30-year. 2.3 on the 15-year, 2.37 on the 5/1 ARM. So I mean, you can see that these interest rates. So let's go back and look. So look at this. I mean, you don't even have to look at the numbers. You just look at the graph and see. Here's where January 2021 starts. So we're already super low, and there's not another piece in this chart that is lower than what it is right now, and that's just crazy. And then check it out. If we go back to this goes all the way back to like 1973. So you can see that. Yeah. So back, I mean, it spiked.
Zoom in on that if you can, because that's just, look at that mountain. We're literally at the bottom of the mountain for interest rate.
I don't know if I can.
Do you have a Mac or?
Here's the top of it. And it's at 18.39%. So actually, I was talking to somebody the other day, and they were building a house back in that time frame, and their interest rate was somewhere around like 17%. Now, though, you have to remember that home prices weren't what they are today. So,
that's true.
Interest rates were decreasing, home prices were also increasing a little bit. So I mean, so
that's still staggering.
It is. I mean, that's like buying your home on your credit card or something.
Yeah, on like three of them. Yeah.
Imagine the Marriott points you would get if you bought your home on your credit card or something.
Yeah,
whatever points
that's so true. I mean, even in some of the most desirable areas right now, if you go back just like 5-6 years, a house that's now 300,000, you bought for 57.
Right.
In some of these high desired areas. So it's just like, it kind of makes you think, in some of these harder areas, like, what is it going to look like now and like 10 years from now or 5 years from now?
Yeah.
So especially with this, I really don't think this unless something drastic happens, I do not think this market's going to soften anytime soon.
Right. Yeah. And, and don't get fearful for when we're talking about the Feds are going to raise the interest rates and things like that. I mean, they're going to go up, but they're talking, when they raise them, it's like an 1/8% or something like that. It's nothing crazy. It's not like they're going to shoot back up to 7 or 8%. In every quarter, they're going to raise it 2 or 3%. That's not going to happen.
No,
that would shut down.
Yeah, that kind of adjustment is not feasible, and that's why it's a gradual increase over time, just like the graph that we just showed you. So I can show you some stuff here that you can find on NAR on Instagram through NAR.
Okay.
NAR Research.
That's the
Let me go ahead
National
and
Association of Realtors.
That it is.
Let's see.
Let's see. Lou's a buddy of mine. He bought his first home in February 1983, stood in line at 6 a.m. for lottery-style bond money for 12% mortgage.
12%. Dang.
And you stood in line.
Oh, my goodness.
Oh, my God.
Stand in line.
Oh, man. That's when interest rates were at its peak. 18% in 1981. Didn't go much lower than that in 1983. Dang. Lou's a very smart man. He's been through it all. Oh man, he's definitely seen it. So I'm going to show you this. I'm going to switch my screen over here and see if I can do it. Share the screen. Let's see here. I want the tab. Here we go. So this is Instagram, as we all know, and then you can actually follow NAR's research and see what's going on a really regular basis. But I wanted to show you this for November. So, like I said, first-time home buyers has dropped down from 32% to 26%, and then even now, nationally, average number of offers received on the most recent closed sale was 3.6 offers. And so that's pretty staggering. And look at this. Nationally, 24% of sales for the nation was 24% was cash. So again, like that is a third, that's a solid third or a quarter in this instance for the nation. That's a quarter.
Right. Yeah.
That's a lot. But this right here, if you're a buyer and you're looking to buy, especially single family home in desirable areas, you're facing this. You have to be creative. You have to be willing to throw in more money if you can.
Oh yeah.
Let's see here. At 18 days. So it's pretty nuts. And the thing is, you can just go back here and you can see the same thing. Look at 18 days on market for October for the nation. First time home buyers was 3% more in October. 1 month, it dropped 3%.
That's crazy.
And let's go back a little further.
Right now, for the state of Florida, right now, as of November, it's the median time to contract is 11 days. So you're talking under 2 weeks. You put your house on the market on, on a Monday, and you're under contract by like the following Wednesday, essentially.
Yeah, it's nuts.
That's crazy.
That is nuts.
From time to market to closing, if somebody buying your house is a loan, is coming in with a loan, then we're looking at what 30 40 days from the time you go on the market, 35 days from the time you go on the market to the time you're moving out.
Gone. Yeah. So many sellers that I've worked with are having to essentially like ask for extra days so they can move out. And so many sellers are having to find a temporary place just so they don't have the contingency of the sale of their home. Right. So again, like here, so this was for the month of June, 31% first time home buyers.
Yep.
And look how much has dropped, 4%. And then offers as high as 4.4, 17 days on market.
Yep.
And it just kind of continues, like it just goes on. And then you can also follow the Florida realtors, which is like pretty much, let's see.
While you're looking that up, let me show you. So here's the median time to contract. So you can see back in earlier this year, it was 21 days. So, I mean, it's pretty much cut in half what it is now, 11 days. And we kind of bottomed out in 8 days. In some markets, it was even less than this. So, and I'm talking like 2 or 3 days median time to contract. So imagine you put your house on the market and literally 25 to 30 days later, it's time to move out. It's time, like, you better be packing up on day 20 because you're done. You got to be out. So things are moving.
Yes, they are. Very fast.
What else you got there, Chris?
No more than 10 days on the market from Joe and Lou. They celebrated because they got bond money.
Oh, heck yeah.
Nice. So here's some more stats. This is for single family. So
your screen isn't
this,
up there.
I know, I'm going to go ahead. I just wanted to get the correct one. Let's see here. Let's try with this one here. The National Association of Realtors for Existing Family Homes. So you can kind of see through 2020 and then 2021. This is seasonally adjusted last month and then year over year. So the numbers just kept growing for the most part. This is National Association Existing Family Home Sales by region. Get the total U.S., Northeast, Midwest, South, and West.
Okay.
And the thing is, all this is public, so you just got to go through NAR. So if you want to see where things are going, how they're looking, so here's the median price for 18, 19, and for 2020. And then if we look at 2021, the number has just flown up dramatically. So it'll be very interesting to see what the median sales price. It looks like it might be in the 650 range.
Yeah.
To see that kind of increase, look, dang, that's big.
Yeah.
That's a big jump. And then here's the national existing home sales, which you already saw. This one's for condos.
Yep.
241, 283, got as high as 311 in June, the top of the market. So you can see, just like the very graph at the very beginning that we showed you, we saw the increase of or a decrease of inventory, and then increase of price directly affects that. And then you can see it kind of leveling out again, and then it just kind of looks like it just capped right there, which is kind of interesting. Condos and single family homes react completely differently.
Right.
But even then, condos is quite a bit than quarterly housing affordability index.
Right. We're kind of running short on time, but I wanted to talk about
Ooh,
one more
yeah,
thing
we
real
are.
quick.
Okay.
Is the lumber prices. So the lumber prices have
Yep.
been a hot topic for the past couple of years now. I mean, lumber
Mm-hmm.
mills started shutting down last year because of COVID, with anticipation that the housing or the new builds were going to also slow down, but that didn't happen. And so in turn, the lumber mills, they started, what actually happened, they started shutting down. And once they shut the plant down, they send their workers home. They can't just go back and flip on a switch. I mean, it's a process to get to get all that stuff back up and running. What
Yeah.
happened is the lumber mills shut down. The new build market, all the contractors, they slowed down a little bit, trying to figure out, okay, well, what's going to happen with, um, how's this going to affect our market, our job? And they said, okay, once they kind of figured it out and things kind of, not stabilized through the pandemic, but they sort of got comfortable, they said, hey, we can keep building houses. So they start going back to building houses, and the new builds started, homes started. Bless you. So the new builds, they started going back up again.
Again,
Hey man, everybody's got to sneeze. It's fine.
everyone's got to sneeze. It's perfectly normal.
Um, so the new builds, they started going back up, and then what happened is the lumber mills are still shut down, so they didn't have anywhere to go, to buy the lumber that they needed to start building all these new homes. And
Yeah.
the lumber mills were like, holy crap, what are we gonna do? So let me show you this graph here that is the lumber futures index, and I'm not going to get into too much detail about what lumber futures means. And just know that as this graph goes up, when you go to Home Depot or Lowe's, your local big box store or whatever, to buy lumber, I mean, the higher this goes, the more your 2x4 is going to cost. I mean, I've seen,
Pain.
so when lumber prices were at normal prices, they were, you could go buy a 2x4 for like what, $1.50, $2 maybe. I've seen 2x4s, a regular 8-foot 2x4 for as much as like $10 earlier this year, $10 or $11, depending on, and I've heard even higher prices depending on where you're at in the country and whatnot. But so you can see, going back to early January, somewhere in the $600 to $700 range, and then it slowly starts increasing this year to where it peaks out somewhere around $1,600 back there in May. Then we started seeing a pretty steep decline. We thought it was going to go back to normal, but now we're starting to see another uptick, um, going into the end of the year. And so right now we're back up to just over $1,100, where back in August we were down $470, and usually about $500 or so is
Mm-hmm.
is typically where it's at. Let me throw the 5-year range up here. So right here, as I'm scrolling across, 2019, we're in the 300s, 400s. We had a little bit of a peak in 2018 where it spiked up to, right around $600. But somewhere around the $300 to $500 range is where we need to be to see normal prices. But yeah, I mean, we saw it jump way up back in May, and then it did drop off. Like I said, we thought it was going to be going back to normal, but it didn't. And I actually have a video that I did on YouTube. If you want to check it out, it's on my YouTube channel, and yeah, I kind of dive in a little bit more deep as to why the prices went up and everything. So, what's going on?
Sorry, my dog is sleeping under my desk, and his neck is like all
Oh,
kinds of just broken, and he's snoring.
oh, no worries.
So
Um, but yeah, I just want to touch on that real quick. But let's see. Well, hey, what do you think? We should wrap it up.
that's his
Oh my
neck.
goodness.
His neck is
Looks
like
like
broken,
it's.
and he's like snoring.
Oh my goodness.
Love that dog. But yeah,
So
I have to wrap this up,
yeah,
unfortunately. But thank you everyone for an amazing year, for being part of us, being part of this. More to come next year. We're gonna be rolling out some cool stuff for you guys. That's for
yeah,
sure. And
we're gonna be
Merry
doing some
Christmas.
more
Oof, yeah.
episodes and some little bit shorter episodes that aren't going
Mm-hmm.
to be live, but you can find us
Yeah.
on the popular streaming platforms as far as like
Yep.
wherever podcasts are found. So like Apple Podcasts,
Mm-hmm.
Spotify,
Yep.
Google Podcasts, all that kind of stuff. So you're going to
Yeah.
be able to find us there, and we're going to be posting a lot more stuff
Yep.
coming up next year. And we try not to have as many audio issues next year.
That's the plan. So
So, well, cool,
everyone,
man.
finish your
Everybody,
drink.
Happy New Year.
Happy New Year. Merry
One
Christmas.
more, one more.
Jared, my friend. It's Justin.
Yeah.
That's your soul, brother.
Cheers. Cheers.
Cheers.
All right, guys. Take it easy. Happy New Year.
Happy